Vietnam's economy is evolving rapidly, with new industries emerging and traditional businesses transforming to keep pace with global trends. As the business landscape grows more complex, the way we approach business and taxation must also adapt to meet these new realities. Recognizing this, the Ministry of Finance has proposed a major amendment to the law on personal income tax, aiming to modernize the system and make it fairer for millions of business owners across the country. This isn't just a minor update, it's a fundamental shift in how business income is defined, calculated, and ultimately taxed, impacting entrepreneurs at every level. The current one-size-fits-all approach no longer fits the diverse and growing landscape of individual businesses, many of which now rival small enterprises in scale and complexity. The proposed changes will distinguish between small and large business operations, ensuring that taxes are based on actual profitability, not just gross revenue, and providing a more accurate reflection of each business's financial health. Larger business households will be required to adopt formal accounting practices, fostering better financial management, transparency, and accountability within the business community. This reform aligns Vietnam's tax framework with international standards, helping to prepare entrepreneurs for a digital, global economy where transparency and compliance are increasingly important. The ultimate goal is a stronger, more equitable economy where tax contributions reflect real business success and support sustainable growth for all. These ongoing discussions mark a crucial step toward building a more sophisticated and resilient economic system for Vietnam's future. It's time for all business owners to engage, understand, and prepare for a new era of fairness, clarity, and opportunity in Vietnam's evolving marketplace. To understand the proposed changes to Vietnam's tax system, let's first take a closer look at the current method known as presumptive tax, or Thu Quan. This system has been the foundation for taxing many small businesses for years, and it's important to see how it works before we discuss what might change. Under the presumptive tax system, individual business owners whose annual revenue exceeds 100 million VND are required to pay a fixed percentage of their total revenue, rather than being taxed on their actual profits. This means that the amount of tax owed is calculated based on how much money comes in, not how much is left after expenses. The system is designed to be straightforward. Tax rates are set according to the type of business. For example, those involved in goods distribution pay 0.5%, while service providers are taxed at 2%. Property rentals and agents face the highest rate, at 5%. Manufacturing and transportation businesses are taxed at a rate of 1.5%. Meanwhile, a wide range of other business activities fall under a 1% tax rate, making it relatively easy for business owners to know what to expect. The simplicity of this approach is a major benefit for small entrepreneurs. It makes tax obligations predictable, easy to calculate, and less burdensome to manage, especially for those without access to professional accountants. However, there's a significant drawback. This method assumes that all businesses in the same category have similar profit margins, and it completely ignores the actual financial performance of each business. As a result, it doesn't account for those who may be struggling or those who are thriving. Profitable businesses end up paying the same tax rate as those barely making ends meet, which leads to clear inequities. Some business owners may feel unfairly burdened, while others benefit from the system's lack of nuance. In fact, successful individual businesses can sometimes pay less tax on their profits than registered companies, even if they earn more. This creates a competitive imbalance and can discourage businesses from formalizing or growing. This gap in fairness and accuracy is exactly what the Ministry of Finance's new proposal aims to address. By rethinking how taxes are calculated, the government hopes to create a more balanced system. The ultimate goal is to ensure that taxes reflect real profitability, not just revenue, so that each business pays its fair share based on its actual success. If successful, this would be a significant step toward a more just, transparent, and effective tax system for all Vietnamese entrepreneurs. The core of the new proposal is to end presumptive tax for high-revenue individual businesses. Starting January 2026, those above a government-set revenue threshold will be taxed on actual profit, not just revenue. The new rate, 17% of taxable income, calculated as revenue minus legitimate documented expenses, This shift requires detailed bookkeeping, aligning these businesses with corporate standards. The 17% rate matches that for small and medium-sized enterprises, leveling the playing field. Large individual businesses and small companies with similar profits will now pay comparable taxes. This change encourages professionalism and accountability, integrating successful entrepreneurs into the formal economy. As businesses grow, their tax contributions will fairly reflect their real success. Let's see how this reform plays out with a real example. Meet Ms. Lan, a fashion designer running an online store. Under the current system, she pays 1.5% of her 4 billion VND revenue, just 60 million VND, regardless of her actual profit. If her costs are high or low, her tax stays the same. Under the new law, if her expenses total 3 billion VND, her taxable income is 1 billion VND, she'll pay 17% of that, 170 million VND. The new system directly links tax to real profit, not just sales. If her profits drop, so does her tax bill. This approach is fairer, closing loopholes that let profitable businesses pay less than companies. It ensures everyone contributes based on actual economic gain. The result, greater equity across the business landscape. The reform isn't a blanket change, it's targeted. Most small-scale entrepreneurs will still use the simple presumptive tax system. The key factor is annual revenue. Those below a set threshold keep the old method. This protects small shops and vendors from complex accounting requirements. For them, fixed-rate taxes remain efficient and practical. But once a business grows past the threshold, it must switch to profit-based taxation at 17%. This marks a new stage of maturity, requiring more detailed record-keeping. The policy creates two clear paths: simplicity for the small, fairness and transparency for the large. It ensures the compliance burden matches business scale. The goal: maintain ease for small players, demand accountability from the successful. The digital economy is booming, and the new law recognizes its unique needs. A special 5% tax rate is proposed for income from digital content, like online games, streaming, digital media, and digital advertising. This lower rate encourages growth and innovation in Vietnam's digital industries. Digital content often has high creative costs but low distribution expenses, so a flat profit-based tax isn't always fair. The 5% rate supports creators and platforms while ensuring digital income is taxed. It brings new income streams into the tax net in a structured way. The policy aims to foster a vibrant digital ecosystem and keep Vietnam competitive. It's a modern, adaptive approach to tax policy for the digital age. The government is actively supporting and regulating this vital sector. These tax reforms are about more than numbers. They're about fairness, transparency, and modernization. The 17% profit tax closes the gap between individual businesses and companies, ensuring everyone pays their fair share. Requiring clear records promotes professionalism and transparency, benefiting both tax collection and business owners. Transparent finances help businesses access loans and attract investment. The special digital tax rate shows the law is keeping pace with new business models. Modernizing tax administration ensures the system stays relevant and effective. When all businesses contribute fairly, public trust grows and informal businesses are encouraged to formalize. The result: a more competitive, resilient, and integrated economy. These reforms lay the groundwork for a stronger future. Transitioning to the new system brings both challenges and opportunities. High-revenue businesses must adapt to detailed bookkeeping and new accounting standards. This may mean learning new skills, hiring staff, or using financial software. Clear guidelines on deductible expenses are essential to avoid confusion and disputes. The government must provide strong support and education for a smooth transition, but the benefits are significant. Better financial records give owners insight into profitability and cash flow. Professional accounts help businesses access credit and attract investors. The reform encourages a shift toward professionalism and long-term growth. It nudges successful entrepreneurs to consider formalizing as companies. The transition is an opportunity to strengthen business foundations for sustainable success. As new tax regulations approach, individual businesses in Vietnam face a pivotal moment. The landscape is shifting, and adapting to these changes is essential for long-term success. This reform signals a future built on fairness, transparency, and professionalism. It's a call for every entrepreneur to elevate their standards and embrace new ways of working. The era of informal financial practices is ending. Successful entrepreneurs must step up. Now is the time to adopt habits that will ensure your business thrives in a more regulated environment. Start preparing now. Keep clear records, track income and expenses, and make organization a daily routine. Use simple tools to manage finances, whether it's digital software or mobile apps, to make the process easier and more accurate. This not only readies you for new laws, but gives you real-time insight into your business health. You'll be able to make smarter decisions and spot opportunities for growth. For digital creators, the 5% tax rate is a chance to grow within a clear, supportive framework. Declare your income, legitimize your business, and unlock bigger opportunities for your creative work. Responsible tax compliance is the mark of a professional, sustainable business. It builds trust with partners, customers, and the community. The government's new system rewards transparency and proportional contribution, ensuring everyone plays a fair part in the nation's growth. Embrace this change as an invitation to grow and professionalize. See it as a stepping stone to greater achievements. The future belongs to those who are prepared, professional, and transparent. Take action now and lead your business confidently into this new era.